Hi YouTube, my name is WMBishop, also known as WMBishop on eToro, and I'm here today to give you my monthly performance review for August. So, my benchmark is the MSCI World Index, represented by the ETF SWDA.L. These are returns for August in US dollars. SWDA.L was down 3.37%. The S&P 500, for context, was down by 4.24%, and my portfolio was down by 5.44%. Now, I say this every month, whether I outperform the benchmark or not, that successful investing is achieved over the long term. We should not fixate too heavily on short-term monthly movements. I do not give much weight to beating the portfolio or getting beat by the portfolio in July or August. Returns over 3 to 5 years are far more important to look at. I believe in the short term it's sentiment that drives the market, but in the long term, earnings drive share prices. The companies that can grow revenue and earnings over the long term should grow their share prices. The share prices should reflect the strength of the superior companies that I invest in. In August, we had 7 companies report earnings. One of those companies reported revenue and earnings growth. That was Tegna. Tegna is the target of a company called Standard General. Standard General are trying to buy Tegna. The transaction is expected to occur by the end of this year, and so we won't go into any detail about Tegna's revenue or earnings. The other 6 out of 7 companies reported revenue growth, but unfortunately declining year-over-year earnings. Medifast reported revenue 15% ahead of last year, but diluted earnings per share was down by 13.6%. Now, both of these figures beat analyst consensus expectations. They were ahead of what the market was expecting, which should give a boost to the share price. However, the management reduced their guidance for the full year, citing inflation as a factor. The share price in Medifast was down hard over August. It was down 25%. However, there are long-term opportunities for Medifast. They only sell in 3 countries right now. So there's international growth, and they can move into adjacent markets in the health and wellness sector. Adidas revenue was 10.2% higher, but earnings per share was 2.8% lower. 85% of Adidas's business grew revenue that year. 15% of their business did not. That is located in China. The China market is struggling at the moment because of China's zero COVID policy and the lockdowns that brings. In fact, Adidas cited 5 factors that are affecting the business at the moment. The China market is one of them, the war in Ukraine another, inflationary pressure, consumer spending and their confidence about whether they can buy more trainers and accessories during perhaps a global recession, and then also the supply chain challenges that many companies are facing in the wake of the COVID pandemic. However, Adidas is a 98-year-old company. They've faced wars before. They have faced inflationary pressure and consumer spending challenges before. And I fully believe that Adidas, they will come through this. Monster Beverage Corporation reported revenue 13.2% ahead of last year, but earnings per share was 32% lower. On the earnings call, the CEO said that he is not managing Monster for the quarterly earnings, he's managing for the long term. In his opinion, and it's an opinion I agree with, the right thing for Monster to do right now is make sure there's supply of their product. It's more expensive to deliver it right now, and so that is hurting margins. That is what is lowering earnings per share. But the supply chain challenges that they're also facing will subside in time. And when they do, Monster will have captured greater market share, and they will be able to earn higher margins. Admiral, that's a UK insurer, their revenue was up 5.7%, but earnings per share was down 49.6%. It was a strong comparison year for Admiral. The previous year was a period of lockdowns, and so drivers weren't driving their cars as much, and so claims were lower. Claims are higher now, and also claims inflation has occurred. The cost of repairing cars, the labour cost, and also the cost of replacing parts or second-hand cars is now higher. This has led to lower earnings per share for Admiral. In response, Admiral have increased their premiums ahead of the rest of the market. This will lead to a drop in market share perhaps in the near term, but it will ensure that Admiral is a very profitable insurer. Estee Lauder, that is a new addition to the portfolio. I believe it was added in July. Revenue was up by 9.4%, and earnings per share on a reported basis was down 15.9%. However, the earnings per share for 2021 was influenced by the acquisition of DCM by Estee Lauder. Estee Lauder already owned a portion of the company DCM, and when they acquired it, they had to record a gain on the acquisition in their accounts. It's just an accounting technique. It led to a higher than realistic figure for profit for last year. When we remove the effect of the DCM acquisition from last year's earnings, then earnings per share for this year for Estee Lauder was 19.3% higher. Finally, we have Nvidia. Revenue for that company was up by 3% that year, which is low for Nvidia. Earnings per share was down by 72.3%. The revenue was held back by upcoming product launches. This leads to lower than usual sales with their customers because they're waiting to stock the latest products. And also harming the earnings per share figure was inventory write-downs. Previously, during the pandemic, Nvidia bought as much product as they could to make their products. They wanted to make sure they had extra availability, or they had more than extra availability. And with the upcoming product launches and the lower sales right now, this has led to a glut in inventory, and they've had to reduce the value of it. This has reduced earnings per share. However, I believe the outlook for Nvidia remains bright, as AI is helping to transform every industry out there, and that is why Nvidia is still in the portfolio. The top three gainers in August were Admiral, Meta, and Tegna. Admiral was up 10.64% in August. This was mainly on the back of the relief of their numbers that came out. While earnings per share was lower, it was less than feared. In July, a rival of Admiral, Sabre Insurance, came out with a profit warning, and their shares were 33% lower in one day. Admiral was down in sympathy by around 20%. When they came out with their results in August, it was not as bad as the market feared, and so for the month of August, Admiral rose by 10%. Meta is the owner of Facebook and Instagram, amongst other things. The share price has suffered lately. It's down around 50% so far. I believe it is an undervalued company. It has 3 billion users. It continues to generate a lot of advertising revenue. And the market that month decided, it's undervalued, so it's 2% higher. Tegna, the likelihood of the deal in the eyes of the market, the likelihood of that acquisition is better. It's got closer by 1 month to the acquisition date, and so the share price rose by 2.2%. It's still below the takeout price because the regulators haven't approved it yet. We're still waiting for a decision. During the month, I bought shares in Louis Vuitton Moet Hennessy, that's LVMH. They're a luxury goods company. They own 75 different brands, and their business spans the wines and spirits sector, fashion and leather goods, perfumes and cosmetics, watches and jewellery, and selective retailing. Some people might raise an eyebrow at me for buying a luxury goods company when we're heading for a probable global recession, but the customers who buy expensive Louis Vuitton sweaters, who buy the best wines and spirits out there, who buy expensive jewellery, they're not going to be as hit as hard as the normal person when the recession comes. They're not worried about their heating bill or the cost of food because they're very comfortable. And those comfortable people are Louis Vuitton's core customers. The concern with their customers is from China. Right now, the Chinese don't have free movement. They can't come over to Europe and buy as many luxury goods products as they previously could. To mitigate this effect, the Louis Vuitton Moët Hennessy are building as many shops as the market will support in China so that those rich Chinese customers can continue to buy their products. This month, I did not sell any of my holdings. And so let's look at the outlook. I will continue to invest in companies with superior fundamentals and competitive advantages in comparison to those in the wider market. That is how I will outperform the benchmarks over the longer term, and that is how I believe one should invest. Looking ahead, we have 3 quarterly earnings reports in September, and when those come out, I will read all of the earnings reports, I will look at the presentations, I will listen to the conference calls, and I will provide write-ups on all those companies on eToro. Again, you can find me on eToro if you search for WMBishop. And then I will continue to invest the cash balance that has built up largely due to the deposit on the 1st of July. It's also receiving dividends right now, and the cash balance makes up 8.3% of the total portfolio. I will look for other companies with superior fundamentals and competitive advantages, and if I find ones that I like, I will invest. I will also consider adding to the positions that I already have and investing money in companies I already am invested in. And so there we are. That's my monthly review for August 2022. Now, I must warn you that everything I have said in this video should not be taken as financial advice. I should word that better. Nothing in this video should be taken as financial advice. Everything I have discussed is my opinion. If you are wanting to invest but you are unsure on anything, please seek the help of a suitably qualified financial advisor. If you have enjoyed this video, please click the subscribe button and you'll be notified of my upcoming videos. And if you are interested in knowing more about me, please find me on eToro under the username WMBishop, and you can follow me there, or if you prefer, you can copy me. Have a good day, happy investing.